Hi everyone, and welcome to this week's edition of Finance on Your Terms. As always, I'm your host, Mike Banasiak, and thanks for joining me this week. So last time we talked a little bit about debt, and good debt versus bad debt, and we found out that really all debt is bad debt. And our ultimate goal is the closer and closer we get to retirement, and really as soon as possible, is to try to pay down as much debt, really all the debt that you have. And so not having any debt, that's the key. That's the ultimate goal. So what makes debt so bad? Well, it's the interest. Interest is what slowly eats away at your financial future. And I wanted to give you an example of that today and kind of take a look behind the scenes at how that happens. So let's say that you've got your eye on a gorgeous 80-inch LED TV. It's something you've wanted for a really long time. And for one day only, you see that they're having a special. It's on sale for $2,000. Limited supply, so you've got to act now. And you think to yourself, if I put it on my credit card with 18% interest, which is pretty reasonable for credit cards nowadays, and I pay a minimum of $40 a month, that's pretty manageable. I can do $40 a month, right? But have we thought about how long that will actually take you to pay the TV off? And that's the question that I want to answer today, is if you did only the $40, how long would it take you to pay off that $2,000 TV? And the answer is 7 years and 10 months. That's right, almost 8 years to pay this sucker off. And in a changing face of technology and how fast technology is moving nowadays, who knows if you even have the TV in 8 years. That's how long it would take to pay for it. But here's the real number that we're looking for. How much interest are you going to pay over the course of that almost 8 years? And when you look at it, the number may shock you. It's $1,724 of interest. That's almost as much as the TV costs in the first place. So your total cost of this purchase, by just paying the minimum, is $3,724. That's a lot of money. And what I want you to think about is, what could that $40 have gone to? It may have been put into a savings account, maybe able to put into an IRA, put it towards a payment on a down payment on a house, a kid's education, whatever it may be. Think of how that money could be working to your advantage, earning you interest versus losing you interest on the opposite side. So think about that the next time you go to make a big purchase. Think about how much time it's going to impact that money. What's that opportunity cost that you're giving up, and how much interest are you going to be throwing in the trash to do that? That's it for me this week. Again, my name is Mike Banasiak. I want to thank you again for joining me. Stay tuned for next week's edition of Finance on Your Terms, and let me know if you have any additional questions that I can answer for you. Thanks.